Hey, it is 12 noon on Wednesday, which means it's time for this week's episode of Ask the Instructor. I'm John Charismo, the instructor at Tampa School of Real Estate, one of the many instructors at Tampa School of Real Estate. But what we do every Wednesday at 12 noon Eastern Time is come to you live to help you understand the technical side of the real estate industry. Maybe it's something that applies a little bit more in the real world. Maybe it's something that's a little bit more important for the exam. A lot of times, it's at least in some way a little bit of both. And that's what we're talking about today. Definitely something essential that you need to know for your Florida real estate exams. This is one of the things I can almost guarantee that any class or state exam you take for real estate, whether it's for sales associates, brokers, maybe even post-licensing, you'll need to understand prorations. And this is something that we're going to see in every real estate transaction in the real world. Now, this is typically going to be calculated by the closing company, by the title company that handles the closing. Then they prepare all the documents. They do this calculation for us. But this is also an important number to know if we're trying to understand either the seller's net or how much money the buyer has to come to closing with. And that's all about prorations. We're going to do three different types of prorations today. And any one of these three you could see in your exam. You might actually even see more than these different types out in the real world. Anytime we have some sort of annual or monthly number that we need to split up the cost between the buyer and the seller, that's when we do a proration. That's what we're going to be doing today. Those three different types of prorations, how to calculate them, how to determine the debits and credits. So this is an essential topic that you want to make sure you know for your class, for your state exams, and also for the real world. But don't worry, we're going to go over that math today. We're going to make it easy. I'm John Charismo. You're watching Ask the Instructor.
You are watching Ask the Instructor. Absorb the knowledge. Become the expert.
Hey, welcome if you're just tuning into this week's episode of Ask the Instructor. My name is John Charismo. The show is brought to you by Tampa School of Real Estate, and we do this every Wednesday at 12 noon Eastern Time. Today's topic is on prorations. And prorations, again, it's where we're taking some sort of annual number or maybe some sort of monthly number. Anytime where we have a cost or some sort of expense that needs to be split up between the buyer and the seller, so that way everyone pays their fair share. That's what prorations are all about. And what these prorations can do is put extra money in your buyer's pocket, or not really usually going in their pocket, but being a credit at the closing table, so that way there's less money they have to pay out of pocket when they close on a property, but this is going to be more money typically that the seller has to take out of their pocket. So before we get into any of the math here, let's talk about basically what it is that we do with a proration. What this basic kind of breakup looks like. So say we've got, we'll do one for property taxes. And what you want to do is imagine the entire year, because that's what property taxes are based on. So we've got January 1st over here. We've got December 31st over here. We've got our calendar year. And let's say our day of closing is, somewhere here in the middle. Let's say it's June 12th. Let's say it's today, actually. Let's say it's June 6th. And so basically what it is that we're doing with the proration, so we have over here the days the seller owned the property, and over here we have the days the buyer owned the property. Now, the reason why we need to do this for property taxes, among some other calculations we're going to do today, also on prepaid rent and assumed interest on a mortgage. But with property taxes, this is one you're going to see in pretty much every real estate transaction out there. And the reason why is taxes in Florida are not payable until November 1st. So on November 1st, then we get paid the entire year of taxes. But who's going to own the property on November 1st? The buyer. And the buyer, whoever really is the owner during this period when the taxes can be paid, which is here all the way until April 1st of the following year. That's our period to pay property taxes. But it's whoever owns the property during this time frame is going to have to pay for the entire year, which it wouldn't be fair to the buyer to have to pay for all this time, about half the year roughly in this example, that the seller owned the property. This is when the seller owned the property. If they sell it before property taxes are paid and we don't do a proration, then the seller gets away with not having to pay any property taxes, which isn't fair to the buyer. Now, ultimately in the real world, this can be something that is negotiated. I mean, you can put anything in a contract and make it enforceable as long as it's legal here. And there's no requirement that the seller has to pay for their fair share of property taxes under the law. But it would be something that would be common that we're going to see. And if you don't alter any of the Association of Realtor contracts, this is going to be basically how it breaks down, where we have to do a proration for the seller's fair share that'll be paid to the buyer. So that's basically what it is that we're doing here. We're taking the money that, whatever this time represents, the dollar amount of this, and we're paying it to the buyer. And ultimately, that's what we're going to be solving for, what this dollar amount is. Because what that dollar amount is going to show up as what's called a debit on the closing statement to the seller, and it's going to show up to the buyer as a credit. We're debiting the seller some dollar amount and crediting the buyer that same exact dollar amount. And this is what's going to go on our closing disclosure, our closing statement, which this is basically our accounting form that accounts for all the expenses and money being received, the debits and the credits for the seller. There's another side that represents everything for the buyer, and then they basically all balance out to say this is how much the seller's going to walk away with, and this is how much money the buyer has to bring to the table. So this is a very important document, this closing disclosure, when you're closing real estate transactions, especially if your buyer or your seller ask these types of questions ahead of time. And like I said, ultimately in the real world, yes, the title company is going to figure out the final numbers for all this stuff here, but if they ask us ahead of time, we want to understand, at the very least understand, that there's going to be some sort of proration, because there are calculators out there who will do these calculations for us. But we need to know at the very least that there's a proration, that the seller's going to have to pay over their fair share to the buyer, but the buyer is going to be receiving that fair share. So again, this is less money the seller's able to walk away with and more money that the buyer's receiving, so less money they have to come to the closing table with. So basically something that's going to hit the seller right away and something that's going to help decrease the amount of cash the buyer needs to close. But again, going back to, this needs to be the same dollar amount, because this closing statement is going to basically, it's just showing the transfer of money here. We don't care about this time at all. Anything after the closing, that's when the buyer owns the property, and we're not concerned about how much money the buyer's share of this is going to be, because that's basically money that they're keeping, and really they're going to be responsible for the entire tax bill for the entire year. It's just that they're receiving this credit, they're receiving this proration here, this prorated amount for the time the seller owned the property. And in theory, if the buyer didn't have any closing costs, they would receive a check for this amount that's the seller's fair share of the property taxes, but they're going to have other closing costs. So this is just going to offset their other closing costs, the cash it is that they need to close on the property, so it's going to help offset that. But they're going to be reimbursed basically for whatever this dollar amount equates to for the time the seller owns the property. So that way, when it comes around November and they're paying for the entire year of taxes, that they've already been credited when they bought the property for the time the seller owned the property. So that's essential. Before we even do any of the math here, just kind of understanding this makeup and knowing that this part right here, debit to the seller, that this is money the seller has to pay, and credit to the buyer, this is money the buyer receives. 99% of the time, this is the calculation that you're going to see, that this is money paid by the seller and received by the buyer. The only time that could possibly be in reverse is if the taxes have already been paid. So if you're buying a property from November, then it's possibly reversed, where the seller would actually be receiving the money because the seller already paid for the whole year and now they're receiving the kickback for that. But on your exam, as well as in the real world, because in the real world, if you're selling your property, I mean, you don't want to pay the property taxes on it. You're like, oh, I'll let the buyer of the property deal with it. Ultimately, you're going to get hit with it either way, but that's usually people's mentality. What am I going to pay the property taxes now? They're not due till April. Let the buyer worry about that. I've got property taxes on my next property to pay for. And that's usually their mentality. So in the real world as well as in the exam, this is a good way to just start eliminating. Your exam is multiple choice. It's going to have 4 options. Even for these math questions like this, it's multiple choice. And you could eliminate answer choices right off the bat because, like I said, most of the time you're going to be dealing with something that's a debit to the seller and a credit to the buyer. The seller's paying money, the buyer's receiving money. So if that helps you anytime you're dealing with prorations, for pretty much all these prorations we talk about today, they're almost always debit to the seller, credit to the buyer. And if you just remember debit to the seller and credit to the buyer without doing any math, you're probably able to get down to just 2 answer choices instead of 4 answer choices. Another thing it is that you want to look for with this here is that these dollar amounts should be equal. Remember, we're just calculating the transfer of money. This is the dollar amount it is that we're calculating for here, for what that time period is. That's the only dollar amount it is that we care about because that's what's going to go on the closing statement. It's going to say that the seller pays that, is debited that, and then the buyer receives that, is credited that. You don't want to see something where it's debited $1,000, where the seller pays $1,000, but the buyer only receives $900. What happened to that other $100? So those dollar amounts should always be equal. Otherwise, that means somebody kind of dipped their hands in the cookie jar and stole $100 from the buyer before the buyer received that full money. So that's another rule. Number 1, debit to the seller, credit to the buyer. Number 2 is for prorations, it should always be the same dollar amount, the same amount debited as the same amount credited. So if you see an answer choice where the debits and credits are different amounts for a proration, that's not going to be a right answer because they should always be the same amount and it should always be debit to the seller, credit to the buyer, except for a few rare circumstances. But whenever you're in doubt, I'm confident in telling you debit to the seller, credit to the buyer, and it probably won't steer you wrong. So just knowing that, you might be able to get the right answer for these math questions, or maybe at the very least get down to 50-50 odds of getting the right answer for a math question like this. But now, how do we make sure that we do have the right answer? Well, it's just simple math for calculating out this proration of property taxes, as well as prepaid rent, as well as assumed interest on an assumed mortgage loan. So again, this is the way we want to start thinking about this, but now let's throw some numbers in here and try to figure out how exactly to calculate this out. We're going to do some examples of this as well as the other types of calculations we're going to be doing, but first we're going to take a quick commercial break. Stick with us. I'm John Chrismo. You're watching Ask the Instructor. If you've been thinking about real estate, look, in this current market, it's hard not to. There's so many opportunities that exist out there for residential real estate, commercial real estate, business brokerage, property management. I mean, it's ridiculous how much opportunity lies from having a real estate license. So look, if you've been thinking about getting a real estate license, I mean, it's minimal cost compared to starting other careers and starting other businesses to get into this. So I urge you to check it out and give it a try. I mean, even if you're just using your license for personal use, you've got huge, immense benefits there. Go to this link. It's licensefl.com. That's licensefl.com. Put that link in the description. It's got your step-by-step guide to get a Florida real estate license. And look, check it out. Give us a call. We're here to answer any questions it is that you have, and go out there and make some money.
Does your current career allow for unlimited income potential? With a career in real estate, the sky is the limit. What you put in is what you get out. Find out more about how you can tap into the unlimited income potential of a career in real estate at tampaschool.com. Did you know that statewide only about 50% of test takers pass their state exam on the first try? At the Tampa School of Real Estate, we've broken down passing class and state exams into 4 simple steps: learning the information, reinforcing the information, testing your knowledge, and being confident and prepared. View the details of the full strategy at passfirsttry.com. That's passfirsttry.com.
Hey, if you're enjoying the show today, which I'm sure you are, be sure to hit like, subscribe, post your comments, share with your friends and family. Thank you guys so much for watching. Hey, welcome back to this week's episode of Ask the Instructor. I'm John Chrismo. This show is brought to you by the Tampa School of Real Estate every Wednesday, 12 noon Eastern Time. We maybe help you do a little bit of math. We maybe help you understand some technical topics. That's what we do every Wednesday at 12 noon Eastern Time. This is here to help our past students, our current students, and our future students. And don't worry, if you're watching now and you're not one of our students yet, you keep watching these shows, you're going to be one of our future students, because we're here to make this process easy, to make learning the information easy, to make getting the license easy, to try to simplify and really make everything easy. Because I mean, when there's people out there doing this already, when there's as many people in real estate as there are, it doesn't have to be hard to make this all work. You've just got to do the things that actually do work, and you'd be surprised how much that works. So that's what we're here to do. We're here to simplify that all down, distill it down to what you need to know to pass your exams, to be successful in real estate. Ask the Instructor. We do this every Wednesday at 12 noon to help you understand the more technical stuff with this here. Sometimes some real world stuff, sometimes some exam stuff, and usually it's a hybrid of the two, where even the stuff that's on your exam, yeah, it might be in your not be in your day-to-day business, but you'll see it somewhere across your real estate career. But this, prorations, you're going to see in every real estate transaction it is that you do. And not just a number that the title company is going to calculate for you, but a number it is that you should know how to calculate so you can help understand the seller's net or the buyer's cash due at closing. So that way you could be better equipped to serve your clients and make them more understanding of how much they could walk away from the transaction with, or how much they have to bring to the table to be able to close on a property. So important to really understand this. Even though there's the calculators out there that could do this, you just don't need to do the basic math of this. But this math is so simple once you know what it is to do with this here. Easy points to get on your exam, and a definite thing you want to keep in your holster for when you're talking to buyers and sellers. So let's give an example here. Let's say that we've got let's put this up top here. And whenever it is that you're dealing with these exam questions on the exam, you always want to start off by pulling out the information that's important from the question. A lot of times in these exam questions on your real estate exam, and you might think that they're just nasty and they're dirty and they're just trying to trick you on your exam, and we could call it that, but the reason why they might throw some extra information on the exam questions is they want to see if you really know what information you need to do these calculations. Whether you're just playing with the numbers to try to figure it out and like guess your way through the exam, they don't really like that on the exam. They'd like to see that you actually do know this material and you did study this material, and you're just not somebody just trying to take the easy way out and get in there. So that's why they typically will include some extra information in your question. Now, for somebody that has studied and reviewed this information, it might make it more difficult for you when it's got that other information in there. But that's why I always recommend, whenever you're starting out doing these calculations or really any question on your exam, is number one, identify what the question is asking. So you read through it and you say, okay, we're dealing with property tax prorations here. But now number two, let's start pulling out the information it is that we need. And if you're not sure 100% yet of what information it is that you need from the question, just write down all the important facts and figures in the question on a sheet on your scratch paper, and you can just cross that out as you go. When you realize, okay, I don't need that, and you just cross it out. The way the question is presented is not always the most user-friendly wording. It's not always the best grammar. It's not always the simplest way to say things. And again, that's another intentional part of this exam, because the contracts that we deal with in real estate tend to have some complex wording in there. And it's our job to get down to what's important in that contract for the client, to point out the details that are the most important to the client. I mean, we could sit there and we could explain to a client all 20 pages of a purchase contract, and they're probably going to be just exhausted and need a break halfway through. But that doesn't make us a true professional. What makes us a true professional is being able to kind of read between the lines, find the details that are important, and present that information that is the most important, and really emphasize that. And that's what you got to do on the exam as well. You've got to pull out the details that are important and then work off of that. So putting that down on scratch paper, you're able to better understand what it is that you're working with here. Ultimately, what we're going to need to do a tax proration is, number one, the tax dollar amount. So let's say that the taxes on this property are $4,800. So $4,800 for our total property taxes. Logan, can you see if we got a calculator over there? I think there's one in here. It's my phone in the other room. So taxes, we got $4,800, let's say. We find that in the question, it'll say taxes are $4,800 for the year. We've got our date of closing, which we'll use the same diagram it is that we drew out over here. And let's say that our closing date is June 6th. Yeah, it's in the back of my office. So closing date is June 6th. And then you're also going to want to look for day of closing. So it'll say something such as day of closing, charged to. Now typically it's going to be the day of closing is charged to the buyer. And that's how this is normally done in the real world, as well as typically how you're going to see it on your exam. Thank you. So you'll typically see this on the exam this way, as well as in the real world. This day of closing, this June 6th here, who pays for that day? That's what day of closing is charged to the buyer is telling you. Who pays for June 6th? Because what we're going to be doing ultimately is taking $4,800, breaking it up to how much that $4,800 for the year equates to per day. But when we figured out the per day, the per diem, although they won't really use that word on your exam, but per day basically, June 6th is a day. June 6th is something it is that we need to account for. So let's say, let's first what we've got to do is we got to determine how many days the seller owned the property. Now remember, we don't care about the buyer days. Everything from June 6th, because remember, we're not going to count June 6th because June 6th is a day the buyer has to pay for. So when we find out how much that tax is per day, that June 6th, we don't worry about that because we're only trying to find the seller days. We don't care about the buyer days. Remember, we're trying to find what transfer goes on the closing disclosure, which is going to be the seller side right here. That's what we're concerned with. For property taxes, prepaid rent is going to be a little bit different, so stick around for that one when we're going to calculate next. But for taxes, this is what we're concerned with. We want how many days, and that's going to tell us the dollar amount. We know it's going to be a debit to the seller and the same dollar amount credited to the buyer. So now let's get down to this here. Finding out how many days we've got. So we've got until June 6th, and there's really no easy way to calculate the number of days other than just adding the number of days for every month. So what we've got here basically is January, February, March, April, May, and June. Now with June, we're only counting 5 days in June because June 6th is on the buyer's side. So we're only going to count 5 days for June. But now the question is, well, how many days do we have in each one of these months? And yes, that is an important detail that you need to understand for your exam. But it's actually pretty easy to remember how many days each month has. Maybe not even remembering, but there's two ways really you could go about this. There's a rhyme. 30 days have September, April, June, November. 30 days have September, April, June, November. You say that to yourself enough times, I swore I would have never remembered it that way, but I've taught 30 days have September, April, June, November. I could say it with my eyes closed. I could say it in my sleep. It's catchy. I didn't like that way when I first was trying to learn the number of days in every month because I always felt like I was leaving some out. Because you're like, okay, 30 days of September, April, June, November. Wait a minute, that's 4 months, September, April, June, November. Is it 4 months really that only have 30 days? It is. But the way it is that you could do that helps, that I like a little bit better, it's more tactile, more visual, is if you take your knuckles, put them together like this, what you're going to have is January. Your knuckles represent 31 days, and we're just going to move across knuckle between a knuckle, knuckle between a knuckle, knuckle between knuckle, knuckle, and then when we get on the other side here, it's knuckle to knuckle. The reason why this is the way it is we have January, February, March, April, May, June, July. Then we get over here to August. July and August are actually back-to-back with 31 days. I don't know if when the Aztecs or the Mayans or whoever came up with our calendar, if this is what they did when they started kind of naming out these months and how many days each month had. Maybe that's the reason why it is. Whether that's the reason or not, it will definitely help you remember this just going across the way here. Now, you do want to remember that February is 28. So February is the odd one out. On your exam, I've never heard of anyone saying that they've seen a leap year on your exam. I wouldn't say it's impossible to not see a leap year on to see a leap year on your exam. Maybe it does show up. And if it does say anything about a leap year, although I don't think it will, then you would need to know 29 days. And for the real world, it is important to know if you're in a leap year, then you're going to count 29 days for that rather than 28 days. So you'd have 366 days in the year rather than just 365. But yeah, so February, we've got to remember it's 28, but then just going across January, February, March. So January and February are going to be 31 days. April is 30. May is 31. And then June, we've got 5 days we're accounting for. Now, this is where you want to be careful. I can't tell you how many times I've made a mistake doing this calculation, and not because this is difficult math, but because it's very simple, easy math. And when we start getting excited and typing this into our calculator quickly, we're likely to maybe hit a button wrong or make some sort of mistake, hit a 3 instead of a 3-1, and now all of a sudden we're off by like an entire month, which is not good for finding the right answer to this here. So we add these together. We've got 31, 28, 31, 30, 31, and 5. And I definitely recommend you write these out like this here, because otherwise you might forget a month when you're just punching them into your calculator if you're just trying to do it off the top of your head. Use that scratch paper you've got to your advantage. But if we added this up correctly, which hopefully we did it slow enough, so hopefully we did it correctly, we should end up with 156 days. So we've got 156 days that the seller owns the property. A little bit under half of a year here, which just sounds about right because June 6th is our day of closing. And look, if you want to double check that, which I do recommend you do on the exam, especially when you're doing this plus this plus this plus this plus this plus this, it's a good measure to always double check that. But we'll assume that we did this correctly, or hopefully don't do that on your exam, because I could be completely off the wrong number here. Maybe it's 157 or who knows what it is. But always, again, just double check that. So we've got 156 days. Now we need to find out our daily rate. So we're going to take that tax bill of $4,800 and we're going to divide that by 365 days. Because there's 365 days in the year, we want to find out what that $4,800 is if we break it up per day. So 480 divided by 365, 4,800 divided by 365, we get this long number here, this super long number. You can kind of see where we've got all those trailing decimals with that there. It's important that we leave this number in our calculator like this. Now we could write this out here, 13.15 ... But really, we're going to take that full number, and that's why you always want to count your number of days first, because now we could just hit times 156, and we end up with the proration being $2,051. And here we could round to dollars and cents, so we'll round it to 51 cents. That's going to be debited to the seller and credited to the buyer. So out of the $4,800, $2,051.51 is the seller's fair share. And you can see how we're off from our calculation of, oh, well, it's about half. Close to half, but I mean half of 4,800 is 2,400. We only are at 2,051. And when we break it down exactly by the number of days we have, we actually are at less than a year, less than half of a year, which corresponds with our math number here. But this is the exact dollar amount for these 156 days that the seller owned the property that should be debited to the seller and credited to the buyer. Overall, this is pretty simple. Once you understand what it is that we're doing, then it's just a matter of, okay, calculating our days, figuring out the daily rate, multiplying that by 156 days, and then we end up with the 2,051 and 51 cents. And that's it. So it's really simple math once you know how to work with it, now you know how to do it. And that's why this is a good one to remember for the real world as well, because like I said, this could be important for the seller's net, for figuring out how much the buyer has to come to closing with. Even if you're using the calculators, you want to know what is basically going on here, because that helps you use the calculator correctly when you know what it's basically doing with all this stuff. So that's a tax proration. Now, if you're able to do this one, you're absolutely going to be able to do rent prorations as well as assumed interest prorations, but there's a few things that are going to be different with the rent proration as well as the assumed interest proration. And that's what we're going to do after this quick commercial break. So stick with us. What we're doing next is prepaid rent prorations. This is another one important to know for your exam. Stick with us. I'm John Cursmo. You're watching Ask the Instructor. Hey, so if you're thinking about starting a real estate career, it could feel a little overwhelming sometimes. Look, that's completely understandable. That's why we're here to help. If you haven't already, check out our Success Center, tampaschool.com/success, or if you don't even know where to begin, give us a call. We'd love to help you out. We've got advisors standing by to answer any questions you have and assist you in any way it is that we can. Our phone number is 813-928-0106. Again, that's 813-928-0106. Give us a call. We're the Tampa School of Real Estate.
Do you want a career that allows you to be in control? With a career in real estate, you'll get to call the shots. Whether you're looking at starting part-time or want to become the next top agent, a career in real estate makes it possible. Find out what it takes at tampaschool.com. Do you want to incorporate studying for your real estate exams into your busy schedule? Now you can review the key topics you need to know to pass your class and state exams with our MP3 audio review. Simply pop in your headphones or connect to your car to reinforce crucial information while you exercise or drive. Listen to the first unit for free at mp3audioreview.com. That's mp3audioreview.com.
Are you thinking about a career in real estate? Hey, I'm John Christma with the Tampa School of Real Estate, and we've helped thousands of people just like you obtain their real estate license. If you're thinking about a career in real estate, give us a call. The phone number is 813-928-0106. Our advisors are standing by to answer any questions you have and assist you in any way they can. Hey, if you're enjoying the show today, which I'm sure you are, be sure to hit like, subscribe, post your comments, share with your friends and family. Thank you guys so much for watching. Hey, welcome back to this week's episode of Ask the Instructor. What we've been doing so far is talking about prorations, and specifically we just went and did a property tax proration and went through solving that step by step, just like you might see that on your exam. You know, if you're just tuning in here and you missed any of the beginning part of this, go to tampaschool.com/success after the show. You're going to be able to see the full recording of today's show as well as all the previous episodes of Ask the Instructor that we've ever done. There's hundreds of those episodes all at tampaschool.com/success. You can put us on for hours on end and listen day or night to learn and study for real estate. But now let's go ahead and transition a little bit into rental prorations. So with a proration for prepaid rent, let's start off by talking about what it is that we're doing here. Just like we made sense out of this with the number line here, that's one of the key things that's different with the prepaid rent as opposed to property taxes is how we're transferring this money and the reason why we're transferring this money. With taxes, we're basically taking money and paying it to the buyer for their fair share of the property taxes. It's a little bit different with rent. So with prepaid rent, and this is if you're a landlord. This is if you're a landlord and you're selling your property to somebody else, which is going to become the new landlord on that. In Florida, it's a requirement, as well as most other states, that when a lease contract is assigned, basically, when a new landlord comes in, that the new landlord or the new owner, they're automatically going to be the landlord, has to honor that existing lease agreement that's there. So what that means is if you're buying a property with tenants in it, those tenants are still going to be there until that lease is over, unless you've got some way to evict them because they're not holding up their end of the lease, they're not doing what they're supposed to do, or maybe you could buy them out or something like that, then you could get them out of there, but otherwise you have to honor that existing lease agreement. So let's say that you are a new landlord taking over this property. And this, one of the big differences here, we're not dealing with a year, we're dealing with just 1 month worth of rent, because rent is typically paid monthly. Now, if this were weekly, then we'd break it up weekly, but on your exam, you're typically seeing this based on monthly rents. And let's say it's here with the day of June, the month of June. We've got June 1st here. June has only 30 days in it, and that's important to remember for your exam, 30 days for June, as well as all the other months, because what they're going to do on your exam, basically, is give you one of these months, anywhere January to December, and then have the proration based on that month. But if you've got a 31-day month versus a 30-day month, or maybe February's case with a 28-day month, you need to do it based off the correct number of days in that month. Otherwise, your proration isn't going to be accurate here. So let's say again our closing is today on June 6th. So here's today, June 6th. Now, with rent, pretty much always collected at the beginning of the month. That's why they call it prepaid rent. They might say specifically on your exam prepaid rent, but it's pretty safe to assume that rent is always paid at the beginning of the month. It's really never paid after you've lived in or possessed the property. So this is where rent is paid, right here. Who owns the property here? Well, remember, this is the seller, and this is the buyer over here. So what that means, if rent is collected on the first of the month, the seller gets rent for the entire month of June. When will the buyer, the new owner, the new landlord be able to collect the next month's rent? Not until July 1st. So what happens here basically, and especially in this case here, we've got just 5 days out of the month that the seller owns the property, but they get the whole month worth of rent. So that's not fair to the buyer, because the seller is really kind of cheating with all this here. So it's not a fair share, and that's why, again, we do the prorations to break this up so everyone gets their fair share, gets billed or gets reimbursed for their fair share of whether it's taxes or, in this case here with an investment property, prepaid rent. So what we're doing with this one, again, we're still transferring money from the seller to the buyer. So our whole thing of debit to the seller and credit to the buyer, that still is going to hold up with this one. So remember, whenever you're in doubt on your exam with any of the prorations, you want to remember debit to the seller, credit to the buyer. But we're working in reverse, or the opposite basically of what we did with the property taxes. With property taxes, we're talking about money here, whereas with rent, we're talking about money here at the beginning rather than at the end. Not in arrears, but prepaid. So the difference now is with this one, we don't care about the seller days, we care about the buyer days. And the time the buyer lives in the property is going to determine the dollar amount of how much rent it is that they're entitled to. And again, it's once you understand how this is made up, the math is really simple with this. The harder part, the trickier part with this is understanding, but once this kind of clicks, it makes sense. We're trying to find out for this time that the buyer owns the property, which we'll say, just like our last one, we'll include that day of closing there. So we'll say that the day of closing belongs to the buyer, that they get June 6th here. But now, based on that, we're trying to find out how much this dollar amount is equal to. It's still being paid by the seller, but that's because the seller has the whole month. The seller has the whole month worth of rent. We don't care about how much money the seller gets to keep. We care about how much money the seller has to transfer. That's what goes on your closing disclosure, how much is going to be paid or debited by the seller and received or credited by the buyer. That's what we're calculating out here for this time period, how much the seller has to kick over. So a little bit more complicated than that property tax one in the way of kind of understanding this here. But once you understand, okay, we want the time the buyer lived in there, how many days they lived in there, and what that equates to in dollar amount of rent, you just need to, again, remember debit to the seller and credit to the buyer. So let's say in the example, on the exam, we've got, let's say $1,200 per unit. It's a duplex. Our day of closing is June 6th again. And day of closing belongs to the buyer. So that's basically what we have out here now. We've got our day of closing belonging to the buyer, so we're counting that day of closing, the June 6th day, because there is rent for June 6th, like any of the other days of the month. We're counting that on the buyer side, and from everything from June 6th to June 30th, that's what we want to find the proration based off of. Now, this is where you want to be careful with this here, Because you might be inclined to do 30 minus 6, okay, 24 days. But 24 days does not include this day of closing. And if we also think of the seller's days, this isn't required to solve this question to know how many seller days we have here, but it'll help you avoid making the mistake of not counting the day of closing. Our seller days is only 5 days. Now remember, we don't care about our seller days for the calculation here, but 30 minus 5 is actually 25. And that's what, if we count this out, and if you want to be sure about this, you probably think this will sound childish, but look, it won't steer you wrong. If you count the number of days, 6, 7, 8, 9, all the way up to 30 on your fingers, or maybe you draw little tally marks, whatever you want to do, you'll see that in fact that we are dealing with 25 days here. And again, that's not because we subtract this number from this number, 30 minus 6. No, that only gives us 24 days because that does not include the day of closing. So whether you have to count on your fingers or you figure, okay, the seller's got it for 5 days, that leaves 25 days for the rest of the month here. Whatever you've got to do, but be very careful because you're extremely likely to make a mistake if you forget about that day of closing. So first you've got to understand who gets the day of closing, which is going to tell you right in the question, belongs to the buyer. So we're counting that for the buyer side, so it's not just 24 days, it's actually 25 days when we count that day of closing, when they get the rent for that day of closing. Now in the real world, as well as on your exam, it might say the day of closing belongs to the seller. You'd put that in the contract if you want the seller to get rent for June 6. But typically how it goes down is the buyer would be entitled to that rent for June 6. Now for the math on this one, pretty similar to what we just did for taxes, but now we're dealing with rent for just 1 month. So what we're going to do is take that $1,200 a unit rent. Now, this is where you want to be careful here because it's $1,200 per unit, but this is a duplex, so $1,200 times 2, we're really dealing with $24,000 of rent money, of income. So be careful. Anytime you see this in your exam of per unit, that's usually a red flag that there's multiple units here, because otherwise they would probably just say $1,200 in rent. But if it says per unit, you probably have to do maybe this extra little step here, finding out, okay, the total rent is actually $2,400 because this is a duplex, therefore there's 2 units on the property. And when they spell it out like this of duplex, it's easy to miss in the exam questions. But again, red flag is if you see per unit. It's $1,200 per unit. Aha, it's a duplex, so let's not forget to do $2,400. But then we're going to take that, divide it out by 30 days. And $2,400 divided out by 30 days, we end up with $80 a day. So basically, this property brings in $80 per day. We could always double check that by multiplying by 30. And yep, okay, $2,400, $80 per day for 30 days. That's $80 a day of rent. But now we need to figure out the buyer's share of this here, so we take that $80 a day, we multiply it by 25 days, and we end up with $2,000. So almost all of that $2,400 rent belongs to the buyer, is the buyer's fair share of this rent. The seller does get to keep that $400, but remember, we don't care about the seller in this case here. We care about the transfer of money that has to be recorded on the closing statement, which is the transfer from, because the seller's got this all in their pocket already. They already collected the full $2,400. If we didn't do this proration, the buyer would be left with nothing and the seller would have the full $2,400. But we do the proration, yeah, the seller gets to keep $400, but we don't care about that. We care about the $2,000 that represents the buyer's share of the month, and that gets debited to the seller, payment from the seller, and credited to the buyer. $2,000 debit to the seller, $2,000 credit to the buyer. Remember, those dollar amounts should always be the same, because otherwise that means that the seller paid $2,000, but the buyer didn't get $2,000. If this was $1,800 here, what happened to that $200? Who's got the sticky fingers that swiped $200 in this transfer here? They kind of cooked the books on this and said, oh, well, $200, you know, that's going to be extra commission for us or anything like that. No, the proration should always be the same amount. And again, that's a red flag that that's not a correct answer on your exam if you see the proration dollar amounts between the debit and the credit being different numbers. So pay attention to that there. But other than that, again, our default rule of thumb, debit to the seller, credit to the buyer. Now, we would reverse that if rent is paid at the end of the month, but I mean, let's be realistic. That doesn't happen in the real world, and it's not really going to happen on your exam either. So your default answer for this, debit to the seller, credit to the buyer. And that's a rental proration. As you can see, not too different than the property tax proration. The key things that are different are, number one, we're dealing with a single month. And number two, now we're concerned with the buyer days as opposed to with taxes, we were concerned with the seller days. So that's how you do prepaid rent. Now, there's still one type of proration that you definitely want to know how to do. And some would argue that it's the most difficult type of proration. Slightly more complex, but I wouldn't use the phrasing that it's the most well, maybe we'd call it the most difficult here, but it's not that much more difficult because these are really easy once you understand what to do, and it's on assumed interest. So interest on an assumed loan, which this is the one least likely to happen in the real world that you'll see, because typically we don't see assumed loans in the real world. A very small comparison to when we have brand new loans being created, but this is something likely to show up on your exam, especially because it's a little bit more difficult to solve than the others. Maybe that's the reason why they put it on the exam as opposed to taxes or rent, because it's a little bit more difficult. And if you could do assumed interest prorations, you could absolutely do all these three. But it's really not that much more difficult. And if you want to see how easy it is, stick with us because we're about to take a quick commercial break. I'm John Carismo. You're watching Ask the Instructor.
Have you seen what's going on in Tampa?
If you're looking to get in on the real estate action that's going on in Tampa right now, we're who you need to talk to. We can help you get your real estate license, start your real estate career. We're here to assist you for the life of your real estate career. Give us a call. Phone number is 813-928-0106, or check us out online at tampaschool.com.
Have you been thinking about starting a career in real estate? Enjoy an entrepreneurial lifestyle that allows for schedule flexibility with unlimited income potential. In real estate, the sky is the limit, and what you put in is what you get out. Learn more about a career in real estate at tampaschool.com. Have you completed your FREC required post-licensing course? There's still time before your next renewal. At the Tampa School of Real Estate, our classroom and online courses will meet your FREC requirement and teach you real-world information applicable to your business. Learn more and enroll today at postflorida.com. That's postflorida.com.
Hey, if you're enjoying the show today, which I'm sure you are, be sure to hit like, subscribe, post your comments, share with your friends and family. Thank you guys so much for watching. Hey, welcome back to this week's episode of Ask the Instructor. I'm John Carismo. The show is brought to you by the Tampa School of Real Estate every Wednesday, 12 noon Eastern Time. We're live, streaming to you, coming in your homes, your phones, your tablets, however it is that you're watching us, to help you understand the technical side of the real estate industry. Whether this is information that you see on your exam or information that you come across in your day-to-day real estate business, that's what we're here to do on Ask the Instructor every Wednesday, 12 noon Eastern Time. If you have not subscribed yet, hit the subscribe button, hit the like button if you're watching on Facebook. If you're on our Success Center, if you're not on our Success Center, tampaschool.com/success, drop your email in there, and whenever it is that we go live, we'll shoot you an email, say, hey, look, don't miss out on this free content to help you understand the real estate industry. So make sure you do that. Again, that's at tampaschool.com/success. Because that's what we're here to do, make you successful. And, you know, a lot of people will undervalue the importance of the exam, of knowing the topics you need to know to pass your exam. But not only is this information that's stuff that you need to know for the real world, not all of it, I'll be honest with you, not all of this information is going to come up in your day-to-day business. Property tax prorations will be in every transaction. Prepaid rent, you only see that if you're selling a rental property. If you're selling a property with tenants, then you have prepaid rent, but otherwise you don't have it. Assumed interest, I would put money on it. You'd never come across a proration for assumed interest in the real world. Maybe there's a proration that the lender will calculate not for assumed interest, but for interest of the month if you're not closing at the beginning or at the very end of the month where it's a full month, what you're doing with that there. But that calculation, it usually represents a small dollar amount for this year. But even though this isn't important for some of these other ones for the real world, that you're not stuff that you need to know how to do. Look, you'd even get by in the real world if you didn't know how to calculate a property tax prorations. That probably wouldn't hinder your success in real estate too much. But none of that stuff for being successful in real estate matters unless you could pass the real estate exam. You've got to be able to pass the exam to be able to have a license to actually make money. So that's why this is so important. Whether this is something you're going to use in your day-to-day business or not, it's important because without this, you can't pass your exam. And without passing your exam, everything you know about real estate otherwise isn't important. So you got to be able to pass the exam first and foremost, and then some of that other stuff starts to kick in and the importance. So let's go ahead and do the assumed interest proration. Now let's first talk about what it is that we're doing. So interest is such a complicated topic. It's really assumed to be complicated, but it's actually quite simple. That's why sometimes they'll even call it simple interest. Even compound interest is pretty simple when you know how to work with it and you understand it. But don't let that fear of it being complicated intimidate you and think you can't do this. You absolutely can, especially when you know the steps to deal with here. So this is when we have an assumed loan. And again, let's say we've got our day of closing June 6th here. Same thing. Let's say June 1st, June 30th. So if you're assuming a loan, again, we've got the seller over here and we've got the buyer over here. If you're assuming a loan, that means that you as a buyer are taking over the seller's mortgage. You're taking over the seller's loan. And when you're taking over the seller's loan, you're going to now take over those monthly payments. What it is that we're doing here, so one thing you've got to make sure you know with interest is paid in arrears, which means it's charged later. So for the month of June, the interest for the month of June is going to be paid in July. So what that means is the buyer, just like with property taxes, that the buyer gets stuck with the whole payment. That the buyer in July is going to pay the entire mortgage payment for the entire month of June. And we don't worry about the principal. We don't worry about the loan balance and how much that's decreasing it, because that ultimately is going to benefit the buyer here. We care about the interest, which interest is a charge, a fee that we don't see come back to us. That we want to break up that interest to its fair share between the seller and the buyer. Now, ultimately, this really is probably the most nitpicky, I would say, out of all the prorations, because it's usually a fairly small dollar amount. But let's say we've got a loan balance of, let's say, $200,000. And we've got our day of closing, June 6th. So we've got our day of closing as June 6th. And then finally, we've got day of closing, we'll say again, charged to the buyer. Now, had any of these, because all the ones that we did here were all charged to the buyer for the day of closing, and I do that just because that's the way it typically will go down. But in case in the real world or on your exam, you see where the seller actually is charged the day of closing or gets the rent for day of closing or has to pay the property taxes, whenever it says to the seller as opposed to the buyer, the only difference we'd make is we'd count June 6th as a seller day as opposed to a buyer day. But like we have here, we've got day of closing charged to the buyer, so that means we're dealing with the 6th to the 30th. Now, again, we've got something in arrears. So we actually, again, do not care about the buyer. What we care about is the seller days. And that's ultimately going to determine our proration. Oh, yeah, one other detail we need here is the interest rate. So we'll see that in our question as well. The APR, the interest rate, and let's say it's, we'll say it's 5%. So we've got a 5% APR, a $200,000 loan balance. The closing date is June 6th, and the day of closing is charged to the buyer. Now, on your exam, it might have other dates in there. And that's where this can seem confusing, but the only date it is that we care about is this day of closing. We need the day of closing. We don't need to know when the payment is due. We don't need to know that it was the loan balance on June 1st. Yet the only loan balance we're going to talk about in these questions is the loan balance that you're going to need to calculate this. So it's pretty much always going to be the loan balance starting the month here there. But we don't care when the payment is. We don't care when the loan balance was calculated from. The only date we care about in these questions is that day of closing, which is June 6th. Now, ultimately, just like we did with the other ones, we're going to take our dollar amount, our total dollar amount that represents the entire month, break it up into a daily rate, and then multiply by the number of days here. So if we're figuring for the seller days, really what we've got is 5 seller days here. So that was easy. We figured out the seller days. Remember, with this one, we do not care about the buyer, because the buyer ultimately has to pay the bill for the entire month. We're just trying to find what the seller's fair share of the interest for the mortgage payment, and then now contribute that over to the buyer. But now we need to find out what the interest is. We have the loan amount, but we don't have the interest. But we do have the interest rate, or also known as the APR, which stands for annual percentage rate. APR for annual percentage rate because it's an annual number. And this is where you can kind of bring back some of that information you might have learned about amortization of a mortgage. We've got some episodes of Ask the Instructor on amortization of the mortgage. If you just go on our Success Center, tampaschool.com/success, just type in mortgage and you'll find all kinds of stuff on amortizing a mortgage, as well as a bunch of other stuff on mortgages as well. Definitely an important topic for your exam in the real world. But when we're doing amortization, we need to remember that this is an annual percentage. So in order to calculate this, we're going to take our loan balance of $200,000. We're going to multiply it by 5% interest, 0.05, 2 decimal places over, turns 5% into 0.05, or we could put it in our calculator. But remember, that's an annual number. Now, this is where this differs slightly between amortization. At this point with amortization, we would normally divide by 12, and that would tell us what the monthly interest is. We're not concerned with finding the monthly interest. We ultimately want to find the daily rate of interest. And if we were to divide by 12, we're assuming that every month is a 30-day month. Every month is the same number of days, which is not accurate, which is why for this one, we actually want to divide by 365. Because that's an annual number, we need to turn it into daily. That's going to give us our daily rate of interest for this year. So we take our loan balance of $200,000, we multiply that by 0.05, we've got $10,000 for our annual percentage rate. Normally, we would divide this by 12. Now, I just want to show you this here, and our interest for the month would be about $833. But we don't care about the monthly interest. We want the daily interest. That's what we're ultimately trying to get to. And you won't be off by a whole lot if you were to divide by 12 and then multiply that, then divide it again by 30. But ultimately, let's just get down to what we want is the daily rate of interest. So we take the $10,000, we divide that by 365, and then per day, we've got $27 and a bunch of decimals for our daily rate of interest. Now remember, we want to leave this big repeating decimal in our calculator, and then just hit times the number of days, which is 5 days, and we get a proration amount of 136 and we'll say 99 cents. So we multiply that by 5 days, and we get 136 and 99 cents. So our proration dollar amount, the answer for this one would be 136 and 99 cents. And again, just like we did previously, the seller's paying this, so it's a debit to the seller. Buyer's receiving this, it's a credit to the buyer. Anytime interest is involved, interest is always in arrears, so it's always going to be a debit to the seller and a credit to the buyer if the interest has not been paid yet for this. And you can see, like I said, that's why this one is the most nitpicky one, because we're only talking about $137 here, $136 and 99 cents for our overall proration amount. But it is something you need to know for your exam. This one probably is not one you come across in the real world, but it's easy math to do. It's an easy point to get on your exam, and that's one less question you have to worry about when you're trying to pass your real estate exam. So that's an assumed interest proration. Just like what we did with the other ones, this one's really similar to property taxes because, again, we're trying to find the seller days and now debit that from the seller and credit it to the buyer. But it also kind of is a hybrid with amortization as well. We took that loan balance, we multiplied it by the interest rate, we divided it by 365 days. We've got our daily interest rate times 5 days, and we get $136.99. And that's how you prorate assumed interest on a mortgage loan. So those are 3 types of prorations. Those are pretty much the only 3 types you're going to need to know for your Florida real estate exams, which is taxes, prepaid rent, and assumed interest. Now, in the real world, we might see prorations for a number of different things on top of taxes or prepaid rent or assumed interest. It's anytime we have some dollar amount that we need to split up between the buyer and the seller, and we want to split it up to the day of who pays for what. So we could prorate pretty much anything. Any sort of proration. This is basically how it is that you're figuring out. It's not that complicated of math and extremely likely to show up on your exam. And look, if you're having trouble with these here, if this made sense but you still aren't 100% on this stuff, practice makes perfect. Practice these. I wouldn't worry about trying to memorize formulas or anything like that. There's really not much of a formula for this at all. That basically is our formula. It was a loan amount times the interest rate divided by 365 times the seller days, but it's arbitrary when we have these formulas. That's why I always advise whenever for the math questions for your real estate exam, don't worry about formulas. Practice it in these word problems, in these questions, because these numbers make sense. When the numbers make sense for why it is that what they are, when there's reason behind it, the formulas become less important, and what's more important is knowing why it is that we're doing what it is that we're doing. Now, if this wasn't a word problem, then maybe formulas matter. If it was solve for X or something like that, like with algebra, yeah, then maybe you've got to worry about formulas. But with these word problems like you see on your exam or these scenarios that we'd see in everyday real estate business, knowing formulas aren't important. What's important is just knowing how to find the number, how to solve it. And again, working through these steps, even if it's the same exact math problems. If you work through the same examples we did today 10 times, yeah, you'll remember exactly what the numbers are going to be, and you'll remember that. But what's more important is you'll start to remember the steps it is that you went through to find that calculation. So if you're kind of on the edge of this here, maybe this makes a little sense, but you're not 100% there yet, just practice this again and again, and practice the same method. I would start off just by practicing the same way you just did this. Try to do this without looking at anything. Try to do this from memory. Take this example that we've got here, solve that from memory, and if you could do it, and then you're remembering what it is that you need to do. Then maybe you could try a couple other examples. But that's prorations. Overall, not that difficult, but extremely important for your exam, and also something we come across quite often in the real world, especially for like property taxes. That's all the time we've got for today. I hope you guys, this is going to help you with your exam, maybe help you better understand your closing transactions in the real world of how these dollar amounts come up for how much money the seller has to pay and the buyer has to receive based on these prorations. Maybe you understand the closing disclosures a little bit better after watching that here. That's our goal, to help make this stuff understandable, to break it down into its simple elements and make it understandable. So hopefully you've enjoyed today's episode. If you have, hit the like button, subscribe to us, share this with your friends and family. Maybe you've got a friend that's trying to pass the real estate exam. You have my permission to go share this video with them. Even if they're not a student of Tampa School of Real Estate, share this video with them so they can go pass their exam, because that's our mission. We're here to help you start a successful real estate career. The best place to find all of our resources for that is our Success Center at tampaschool.com/success. Again, that's tampaschool.com/success. Thank you guys for tuning in today. Make sure you tune in on Friday for State of Real Estate, where we talk about how to mastermind or grow your real estate business. But that's about all the time we have for today. If you have questions, drop them in the comments. We'll be sure to address them after the show. Thank you guys for tuning in, and I'll see you Friday. If you've been thinking about real estate, look, in this current market, it's hard not to. There's so many opportunities that exist out there for residential real estate, commercial real estate, business brokerage, property management. I mean, it's ridiculous how much opportunity lies from having a real estate license. So look, if you've been thinking about getting a real estate license, I mean, it's minimal cost compared to starting other careers and starting other businesses to get into this. So I urge you to check it out and give it a try. I mean, even if you're just using your license for personal use, you've got huge, immense benefits there. Go to this link. It's licensefl.com. That's licensefl.com. Put that link in the description. It's got your step-by-step guide to get a Florida real estate license. And look, check it out. Give us a call. We're here to answer any questions it is that you have, and go out there and make some money.
Does your current career allow for unlimited income potential? With a career in real estate, the sky is the limit. What you put in is what you get out. Find out more about how you can tap into the unlimited income potential of a career in real estate at tampaschool.com. Did you know that statewide only about 50% of test takers pass their state exam on the first try? At the Tampa School of Real Estate, we've broken down passing the class and state exams into 4 simple steps: learning the information, reinforcing the information, testing your knowledge, and being confident and prepared. View the details of the full strategy at passfirsttry.com. That's passfirsttry.com.
Hey, if you're enjoying the show today, which I'm sure you are, be sure to hit like, subscribe, post your comments, share with your friends and family. Thank you guys so much for watching.